Market Mondays. This is Dennis Wilburn with the Active Trend Traders. Last week, thank you, on Friday, I was not available to do the two presentations I normally do on Friday, which is the final hour for premium members and the how to make money trading stocks and ETFs for basically just anybody who wants to join on that one, because I was with my wife and she was getting trained on how to trade futures. Very interesting. What we realized that, if something happens to me, she's going to need to, basically pull in some additional income. And so I was really surprised. She said, I want to learn how to, she wants to learn how to trade stocks, not stocks so much as just trade options and futures. And so we're in the process of pulling together a program for her to be able to do that, to meet her weekly income expectations. And so I'm really pleased. So maybe getting to see a little bit more of Michelle around as she gets to be a futures trader. Anyway, remember, all materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance does not guarantee future performance. What's our objective with Aftermarket Monday is basically timely actionable intel at the beginning of the week. Sometimes that timely actionable intel will be, we're not going to do nothing. We're not going to do anything right now. We don't have the setups, and that's okay. We've learned that having that it is much better to be patient and wait than try to dive in and make something happen when nothing is intended to happen. We'll take a look at some stocks, ETFs that are potentially setting up. And the thing about it is we want to have patience and stand back and respect the rhythm of the markets. Remember, the best trade of the year comes around about every 2 weeks. So here's where we're seeing the Russell towards the close today went back into the red. Negative numbers for both the year and from last year's high. S&P and Dow, down a little bit today, and so they're pushing back down still. NASDAQ and the composite still up about, almost 5% on average between the two. And then we're up at about 106 as we're moving forward. Those of you who are premium members, I hope you did get the alerts today. Text alert went out. Now this is this latest trade is basically it is an educational trade, and so you may want to look at paper trading that, see what happens with it before trying to jump into it. So here's what we're doing with our setups. Okay, we're focused on 7 ETFs, as most of you know. The spiders, the Qs, the IWM, which emulates the tracking index that we follow, which is the S&P 500, the NASDAQ 100, and the Russell. And we throw in a couple of other industry groups over here and commodities here. And we think that provides a pretty good basket to be looking at on a weekly basis without getting into what and how we're going to do that, or without having to chase hundreds and hundreds and hundreds of stocks. We do throw in a core selection of stocks, which is Tesla, Baba, MDA, Netflix, and YY. Now, our premium members, of course, get the triggers that trigger on each one of these when they happen. Then I'm looking at, I wanted to, for all active trend traders, both members and non-members, I wanted to basically provide bonus trades, and rather than trying to provide a bonus trade, one stock per month or 10 to 12 stocks per year, why don't we hone in on helping people learn how to trade just JNUG and JDust? Absolutely phenomenal opportunities there. And so that's what we're going to be doing. We'll take a look at that every Monday, every Friday. During the free sessions, of course, the triggers, the alerts, the text alerts and all that kind of stuff will go to the premium members, and then it'll be followed up with a email alert that will go to all active trend trading members. So And the reason why is because gold is in the process of doing some interesting things. One, I'm following either the black or the red line. We're down towards the end of Feb, and then what happens typically in March is gold tends to fall off. One of the things that my wife, or that Michelle was interested in trading, is potentially trading gold as a future event. And I'm amazed by the leverage that is available for that, to trade that. And who knows, we may see some futures opportunities with futures for active trend trading members, at least the alerts. I'm not going to teach people how to trade futures. So JNUG, why do we want to pay attention to JNUG? Well, one, it does this kind of thing. This is a daily chart on JNUG. And last year, this is just 2017, it had multiple runs that were over, well, in some cases 57%, 56, 62, 61, and a lot of smaller ones in between, that were around 20%. Even if a person just got into, was able to capture half of these 4 runs, they would have taken $1,000 and grown it to $2,800. I'm amazed, and I still believe that many members are looking for means to just generate an income. And also, given, I hope you got a chance to look at if you're a premium member, look at the On the Radar video last night where I talked a little bit about the market cycles. And I was really amazed on the market cycles. We keep saying that, we're approaching the 10-year, or not, correction, 9-year average as far as bull markets. They typically don't run more than 9%. However, there seems to be 2 different groups on that. One group is the 8 bull markets we've had since 1929. Excuse me. 4 of them have been in excess of 10%. Matter of fact, their average is up about 13.67. The ones that were shorter of that, their average is about 4.2, 4.4. So that tells us we have 2 different groups or pockets to do the average on, and there's actually very few, absolutely 0 of the bull markets that lasted exactly 9 years. And so when we think about a 9-year average, we may be thinking, well, we got to be close to getting to the top. Well, the fact of the matter is based on the average, the top could be, 4+ years, 3 to 4 to 5 years away. So we have to be still prepared to trade to the long term, but we also want to be making sure we're building up our cash, because this next bear market is going to, I believe, there is an absolutely phenomenal opportunity to go into some long position. JDUS, which is the inverse of the junior miners. What kind of deals did it do? Well, look at this. And again, I'm not saying we're not going to capture all of this from bottom to top, but if we can just carve out the middle half, junior golders would have taken a $1,000 investment at the beginning of the year, grown it to 3,225 on 4 moves. That's a 300% gain in June. So is it worth watching? I believe it is. And I'm going to plan my investing. I'm going to plan my trading in accordance with that. So let's take a look at what we're doing right now. Seasonal expectations, talked about that with gold a little bit. We're in the zone where the market, even in a bull market, tends to do a little bit of a pullback correction. What we're seeing right now is we did see a push up after the big sell-off, and so this may be the dead cat bounce kind of thing that we're talking about, or an attempt to push back up, rally back up to the highs. So this may be the second step in the topping 2-step, and they're showing some indecisions, bonus trades. We talked about that. Catfish special, none this week. But just remember, active trend trading, we follow 4 rules to entry, 6 rules to exit, to keep it just really, really simple. And one of the things in watching or going to class with my wife, as the instructor was talking about that, of course, as he was showing the charts, in my mind, I was sitting there going, click, click, click. Oh, those could be active trend trading signals. Those could, and so it's stirred my interest, to say the least. Again, to get one of those where we can generate some income, additional streams of income for our members. And so right now we're still working on this $500 per week, $500 to $1,000 per week. We averaged in January $500 per week with the what we pulled in with the for the month. And I want to get that where it's a little bit more consistent going into the next month, which is March. Okay. Let's take a look at what may be some interesting opportunities that are out there. Let me pop over here to, okay, S&P. This is what I was talking about on the S&P. We had this big, massive pull down. This was a pretty good meltdown, about 12% from high to low. That was the best. That was the best pullback that we've had. When I say best, in excess of 5% for well over a year. We popped back up. Where did we pop back up to? Now, according to Dow theory, Dow, whenever we get a sell-off or we get a shoot up and pull back, if the pullback was just to the middle third, in other words, from here to here, and then pulls back to the middle third, he would anticipate there being a bounce somewhere off this magic fib box, because he said that it would tend to pull back somewhere between a third and 2/3 and then rebound. As you can see, in reality, we blew right through that, and now we have another thing, and it works in the same opposite way going the other way. So we have a sell-off, a rebound, running out of gas prior to reaching or prior to rallying up to its long-term objective here, or reset the entity back into an uptrend. So now we can consider ourselves in a, I'm looking at the wrong chart, excuse me guys, hold on just a second. It was the correct chart, but it was, there we go. So I've got a daily and I've got a weekly over here. Let's blow that up a little bit. And as you can see, okay. Interesting to look at. If we are going into a downtrend, then this zero line is working the way it should work. We're coming up and bouncing our head against the zero plan, and we should roll over and fall. What are we to do up here? Well, basically, are showing that this is a level of where sellers are coming in. It hasn't busted the 8-day yet, but if it does bust the 8-day, then if we get a close or a move back below the 50% retracement, the 50% retracement, then we're probably going to bounce our head off the 382, which perhaps just happens to coincide with the 200. So I'd be watching that. We blow through the this level, the 200-day moving out, or the 100-day moving out, excuse me, or the 382, then we're probably going to go down here and revisit the 2600. There is a buying zone down here in this area where prices gap back up above this, right about here. I'll draw it in for you so you can see which one I'm talking about. Okay, it's about, because you take that follow-through day and just, this buy zone is about, this big. That's about, see how far that is. Yeah, right about there. Maybe right in the middle of it is where the other line is, where that would be in a place where you could anticipate it popping back up. If we pull on back down in here, we may get a weaker pop, but what would tend to happen is, of course, since this is a lower high, blow right through that and give if it gets a symmetry of move, it would be from here to here. What does that symmetry look like? Well, let's just take a real quick idea of that. Let's go from here to here. Let's see if I can activate one of those. Let's activate the trend line. Let's roll that on over. If this is the second high, pop that in. Where does that put us down at? Well, right down here at the 2400 level. And the 2400 level, that would be a correction of about 15.87, so we wouldn't be quite to bear territory yet, but it is within reason, and there's a strong level of support right down at that level. So we'll see what the market gives us. NASDAQ, similar type of thing. We get a couple. Okay, we know that right at the top of these two candles, we are at a strong level of resistance, and or which that kind of goes with what happened over here. Sellers came in here, dropped out of this top zone up here. We had some indecision, drop. So it's pushed up into this place where the sellers came in. Well, the sellers are still there. They're still wanting to sell. And so we're pushing down. And this is what I'm talking about. These little small body candles are considered indecision, doji candles. And they're trying, well, this market either one tries to gain some of its strength, get its win so it can push on to the high, or it may just say, it's not worth it. I've been on this bull market for over 9 years now. I'm going to rest some more and do a real big fall off. So we shall wait and see. And it could be interesting. Then Russell, RUT, didn't like that. So let's do this, RUT. Russell looks even better to the downside. Off the intraday chart, we probably want to let it bounce back up a little bit into this area here, but it's showing some weakness. It did break out of this little indecision pattern up here, which is basically that spinning top right here at the high. And so there is strong level of resistance right there at the 1550 level. What does that look like? Let's roll over real quick on IWM. Well, IWM, that looks like that. So there's the strong level of resistance, and actually reversed down and fell today. And take off the, not TNA, but TZA. Does TZA look like a potential interesting trade at the time? Not quite yet, but it looks like it could be. So it does have its level of support down here, 1159. If we do get a trigger on TZA, what's our upside target? Well, somewhere between 12.99 or 14, and you get a run up to 14. You're looking at about a 10 to 14% gain on that. Would be what I'd anticipate. It could push higher, but we'll have to just wait and see what this is going to give us, because it looks like it wants to turn and rally. Of course, the TSI has not turned up totally. So that's what we got going on there. I will cover real quick YY. Let you know what's going on with YY. YY has earnings coming up currently on 3/5. The trade we did today was getting set up for that. Premium members, just watch and see what happens. I saw this trade set up over the weekend, and I just went, when I saw it, I went, oh my goodness gracious, it is amazing. So we'll just see what happens with that. If you are along for the trade, you want to be selling some weekly options. You can sell 3 weeks worth of weekly options against the straddle position that we have on, and go from there. So that's what we're doing with YY. LABU, I'll just cover that really quickly. LABU looks like it wants to roll over. So does that flip us potentially into, I don't want to trade LABD simply because it's just too small. I mean, we need to get a reverse split on this to get its price back up in the $20+ level. I mean, it could take off and run. It's got almost 9 million shares per day. And so, if it moves a buck, that's 30%. So, worth keeping an eye on. Okay, FAS, I'm not interested in basically trading because they're just so emulating the indexes. So we can get the same bang for a buck with the indexes. Oil, again, emulating the indexes to some extent. We've got a shooting star on a daily chart. Looks like it wants to roll back over. which would make it a lower low, its second lower low. So oil would then be in a downtrend. Now, SCO would be something I might be interested in jumping onto. Do I want to jump on it quite yet? No, because my TSI is still pointing down, but longer term TSI on the weekly chart has popped up. So that's where we're at with that. And now let's jump over here to JNUG. JNUG. Okay, as you can see, JNUG acting similar to the other indices, or to the indices, came up a couple of days ago, put in a high, bounced down off the weekly chart, and is running back down towards what looks to be 12-ish. Those of you who traded JDust, I know some of you did, and there was a wonderful buy opportunity on JDust as it came in, put in this little inverted hammer down here about 50 bucks. You could have got into that. Be expecting premium members to start seeing conditional orders come in where we've isolated and highlighted these bounce zones. Be watching to see, you'll get a picture of these bounce zones, and I'll be letting you know where they are. So be watching for some new orders that are going to come out on this. Now this is rolled on up, pushed through, but that was a heck of a trade. From there, from 50 up to, it got as high as almost 60 today. So that's about 21%. And so you could have taken out some of it all anywhere along the way, 55, 58, 57, and would have been a strong move. But this looks like JDust daily chart looks like it wants to move higher. So we'll keep keeping our eye on the intraday chart for a potential opening on that. And I'll just throw one more out there, Baba. I'm just going to watch, and it's kind of a bouncing in this little zone here between 190 and 180. Roll back over. We kind of have some, well, not negative divergence, but we know we have strong level of resistance at the 190 level. So if we flip back down out of this and fall, we could fall all the way back down here to the 100-day moving average at 178, or all the way down to where it did its reversal earlier. But it's looking exactly like the indexes. It's just going to move more. So that's what I've got for today. Let's see if we can get some questions and answers. Do you ever trade UPRO? I know that before it was something that you looked at often. Yeah, we watch UPRO, Ray. It's one of those that we look at trading either typically UPRO, TNA, or TQQ to the long side. We won't normally trade all three at the same time because they're indexes and they're going to emulate each other fairly well. And so thanks, Bob, for the update on Jim. Should one chase this YY strangle? It's not a strangle, Skip, it's a straddle. Up a bit from the 2760 by 5%. No, I wouldn't chase it up whatsoever. You may look at something a little bit higher. I wouldn't want to put that much else in there. And see, David purchased 440 GDST already at $2. Yep. Nice little in. Again, David, we'll be getting out some earlier alerts on those. Jim, yeah, 0.3 looks like a pretty good delta on it. Jim, I will be covering that YY trade in depth tomorrow night for the premium training. Because that way we'll have a very clear level of expectation. I did cover it a little bit and showed how to utilize the historic aspect of Thinkorswim's platform, Think Back or whatever they call it, to go back and look at what would have happened if we would have done this in the past. And it showed, pretty good result in it. We're after basically a real quick 100% return on that particular, one of those type of earning trades on particular types of stock. What kind of stocks? Typically growth stocks like NVDA, Tesla, Netflix. What else we got? You can even occasionally do it on Apple, although Apple's not a growth stock anymore. But it's like I said, if you have 4, 5, 6, maybe 10 of those growth stocks that move a lot around earnings, you'll be really surprised at what kind of return that this particular take on strategy to earnings trade, what it'll do for us. And the answer to the other question is, yeah, I wasn't necessarily intended on sending them out. Just I was gonna basically, we'll cover that tomorrow night, and that way people will know how to do it, so they can trade the sell premium against the straddle. And the only reason we're trying to trade this collect premium for the straddle is because we're going to be holding that for about 3 to 4 weeks, and that's going to cover our time loss, our time decay on the option. And for those of you who don't trade options, just all that I just said, you're going to go, what the heck did he just say? And so, okay. Well, then I'm going to call it a day. And again, we're going to be waiting for our setups and anticipating pushing into finishing up the month of February in a good position. And we'll be talking to the premium members on tomorrow evening. And so with that, God bless everybody. Have a great Tuesday. Aloha.